Hello and welcome to the Stock Planner channel. Today I'm looking for a stock that might go down over the next few weeks and one that I can trade some options on. So we're going to look at CHRW Company. It's a worldwide shipping company. And before we get started, I'd like to say that Stock Planner channel is a education channel and we share our ideas. We do our own due diligence, make our own trades, we learn our own stuff. Never take advice from anybody on the internet. Do your own due diligence and win. Let's get started. Searching for a large cap stock that's not growing so fast and possibly overvalued. Large cap, overvalued, and the 3-year growth rate is not growing. In other words, I'm looking for some bad stocks, things that go down, especially in this day and time of inflation, recession, world unrest. Came up with these 10 companies, some oil companies, a little bit overvalued, in other words, overpriced. There's a materials stock, and here's the one I'm looking at, is a shipping company worldwide. CHRW is a worldwide shipping company, freight transportation and logistics. It's slightly undervalued, but not by much, and the earnings have not grown too much over the last 5 years. This is what I'm looking for. Earnings are expected to decline by 6%, and a lot of debt. FedEx is a big green snowflake, and you see this is an orange snowflake, but still a very good company. The current price is about what the fair value should be, and here's that future growth. You don't want it to go down, you want it to go up. Now I'm a swing trader looking for the major swings and capture the trend between it. This is the zigzag indicator. It's a future looking indicator. It repaints itself. That's why it's so perfect all the time. You can't use that. But I use the MACD, the stochastic, and the RSI. Back here, we had a crossover, and that's usually a sign for the MACD to go up, and it went up a little bit. We had a crossover of the RSI here and here. That's usually a sign when it crosses below the 30 and come back around. That's usually a sign to go long. And the stochastic RSI, when it's below the 20 and come back around, that's usually a sign to go long. And when they all occur within a little bit of each other, that's usually a bullish sign. We have a bullish sign right now for CHRW. So why am I going short? When the RSI is above the 80 and it's about to come around, it doesn't look like it came around quite yet. Above, come back around. That's a sign to go short. And that's what we have now. So whether it goes short or long, we had long singles back here and it went long. And we have short signal now. Will it go short? These are just lines on the chart. Nobody really knows. It's just a roadmap. I think it's going to go short. Back to Simply Wall Street again. The CEO has exercised $1 million worth of stock. That's usually not good news. A Seeking Alpha article. It says it had a good quarter, both revenue and net income. And there's concern that revenue will decrease based on the fact that our economy is slowing down. Current price is 105. Target price, according to FinBiz, is 110. That's a $5 difference. That's not a lot. And this is a predicted price over a course of a year. CEO selling stock, slowdown of the economy is probably going to float in here for the next year or so. There's an expected move of around $8. And that definitely puts it within that 110 that FinBiz was talking about. But the expected move, you don't know if it's going to go up $8 or down $8. We'll draw a line at the 100 level there. But if it goes down, or if you think it's going to go up, if it goes in, you invested $100 and you went either long or short. I'm going short over the next 3 months with this 7% expected move. That'll give you $75. That's easy to figure out, which is a 30% return over the course of a year. And if you do that 4 times, that's just dandy. It's very simple, but you got to be right in what you think is going to happen. And there's it's either up or down, and there's very little correction. Another alternative is to sell options going out to December 15th and selling 2 100s. In other words, these are when you sell calls, you want the price to go below. And if it goes down $5 or $6 or $7, this becomes very profitable. And you buy a 95 for protection and a 110. The point is, you're going to get $175 in your pocket, and your max loss on this trade is $325. And you have a chance, if it ends up here in the next few months, that's where your most profit is, when it's prices around this 100 time frame. See how that works? And the nice thing about these kind of spreads, they're easy to manage, and you can get out anytime you want. If it goes down, you can take early profit, and $60 on a investment of $300 is not too shabby. Better than 20%. Plus, when you buy a call, if this thing starts moving up, you get rid of these and you let it go. Lots of ways out. So, do you like this trade? Immediately to get $175 in your pocket, there is no downside risk. You're guaranteed to get $175 if it keeps on rolling. And if it ends up in here somewhere, not too far away where it's at, and that's what it looks like, the price is not moving that much, you stand to win a lot more, $675. But there is some upside risk. If it goes the other way, that's trouble. So is it going up, going down, or is it going to stay in this area here? Looks like that's where it's been. So all we needed with this trade is it to move a little bit down. And there's one thing I forgot to tell you. When I mentioned that the expiration is December 15th, that was at December 15th in 2023. It's about a year and a half. It's a lot of time for a little money. Going down or going up. Risk $325 to make a guaranteed $175, or 3 to 4 times that if it ends up without moving a lot, which is what I think is going to happen. Let me know what you think of this trade. Put some comments in below. I'm sitting right below 1,000 subscribers, so remember to subscribe and make me a happy guy today. Happy trading. We'll catch you on the flip.